Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading platform. As you may know if you have been a subscriber on the channel for some time now, Mark, who has been successfully investing for over 40 years and warned us to get out of the market in 2021 November when the market was at its peak, is now helping our subscribers on swing trades, analyzing more than 1,000 companies each week based on 10 indicators, and sharing the ticker symbols of the stocks that are set up for good uptrends every day, along with weekly Zoom calls for Q&As with the members. So if you might be interested in our service, please make sure you check the link in the description below. So when you swing trade, knowing how to read the macro market or indexes such as the S&P 500, Dow Jones, and the NASDAQ is as important as finding individual stocks that are set up for good trades, since if you can read the momentum of the market, then you will have a better chance of making profits with your trades. So for example, if the S&P 500 chart indicates that the market is in an uptrend, usually the majority of individual stocks have a high possibility of changing to an uptrend momentum, and therefore if you swing trade in this momentum, you usually have a higher possibility of making money with your swing trades. On the other end, if the chart indicates that the market is in a downtrend, then usually the majority of stocks would mostly have a pullback, and in these market conditions, it is usually better to wait and keep an eye on the stocks that are falling and then are setting up for good trades. So in the past week, after the FOMC meeting and after Powell's speech, the market has been going down dramatically and the majority of individual stocks have been hammered. So now then, let's take a look on how Mark looks at the major indexes that represents the market with his chart analysis. So now let's check on how Mark looks at the market indexes that represents the market with his chart analysis.
This box here is this week, but what I want to do is back out, and we hit a high back here in July, okay, and technicians will watch to see whether you have higher highs or lower highs. And here we hit a lower high September 1st, and then we hit another lower high September 15th. So the highs are getting lower. And then we look for lower lows, which we had a low on August 18th. And then we just hit another one yesterday on September 21st. So we're seeing lower highs and lower lows, which is normally a trend down. We're seeing our MACD has crossed negatively, our slow stochastic has crossed. We have an RSI that's down. So this week, last Friday we started out and it popped up and came down, and we had a big market downturn Friday. And then Monday, we didn't trade all that much. And then Tuesday, this is in anticipation of the Fed. And here's Wednesday. And we went up initially on Wednesday. And then we were fine until Powell spoke, and then we just dumped. And then yesterday, the dump continued. And then today, you can see it's just kind of a candle of indecision of what we're going to do. But we've come down below the Bollinger Band. So we'll see if that holds, or are we going to continue this slope down? You can see the 9 sloping. You can see the 20 sloping. We got the 50 coming down. Those are not good signs long-term for where this market's going. And again, we're down below on the MACD, the stochastic, and the RSI. But we're starting to get close to this 200-day moving average. And this is the line I use on indexes to basically tell you when to get in or to get out. And we back up a little bit. And you can see here we were in, went down, got out, back in. And this saved us a long-term trend. And that's basically when I got out at the end of the season. It came back and it came back up. And we've been kind of up above it since then. But this was kind of a long area here. This is April of 2022, and we didn't really get back into it until January of 2023, where we crossed back over. So that's kind of what I'm looking at. So if that gets below, you can see where we're headed. That's going to be significant, at least from my point of view, for the bigger indices in general. Let's look at the Dow Jones. Here's this week in the Dow Jones. You see again, kind of waiting. Dow really kind of wicked down on Tuesday before the Fed. Then the Dow went way up before the Fed meeting, and then the Fed announcement came out, and then Powell talked, and it just dumped. And then yesterday, same thing. We dumped. We're below the Bollinger Band, and today we're just kind of even down here. See the same on the MACD, stochastic, the RSI. Starting to see a little roll over the 50. We see the 20 and the 9 are rolling over. We could follow this Bollinger Band down. You can see we've done it before for quite a while. We'll see, but we're a lot closer here to the 200 on the Dow Jones. So we'll see what happens. So here's your 200. You see we've been up. We dropped down below it, and you can see you can be down. See what it got out or out here. You got back in about there. You'd saved this opportunity cost. You could have put it in a treasury bill or whatever. We came back up. We touched on here. Still went up. We haven't touched it yet. Here we touched on it. Let me get a little closer. Here we came we didn't quite get, we wicked under it, but just kind of, you can see how strong a 200-day simple moving average is. Then we went 1, 2, 3, 4, 5, 6 days before it came back up. And then it's been up above it since. So we're going to want to watch and see. And this again is on the daily chart and see if it bounces off of this because it's a very strong level of resistance, or if it actually goes down under. We're seeing, softness in the MACD, the stochastic, and the momentum are all down. So we'll see what happens when it gets down there, or if it does. Maybe it'll come and, bounce off the Bollinger and come back up towards the mean. Or does it keep sliding down? This is the NASDAQ. This was April of 2022 and never got back above it until around January of 2023. Looked like we bounced on it a little bit here and then have been coming up. But this one is a little bit further. I mean, this one has all the big boys in it, the Magnificent 8 or 7 or whatever they are. Again, we're bouncing off the Bollinger Band. These are the last 5 days. So I look at the last 5 days because I kind of, with our swing trading, I kind of update every weekend and move my stocks from, whether in the dumpster list to the under 200 to the horizon to the watch list. And you can see that it's hard to move stocks up into higher levels of where we want to be trading them when the stock market goes down like this. So my list is going to rebalance from the watch list and the horizon list to the dumpster list. They're going to have 2 columns of dumpster list again this week, I'm sure, and less on the other side. So again, we're a little bit further from the 200. We still see same things down here as we saw in the other 2 indices.
As we just saw in the charts, although the market seems as if it's moving in a random pattern, if you spend time learning how to read the charts, you will notice that any stock, including the indexes, follow indicators and move in a certain pattern and have specific support and resistance levels they usually bounce back or get rejected on. So although chart analysis is not 100% accurate, if you learn how to read the charts and indicators from an expert like Mark, you will become more and more used to the chart patterns and indicators to the point where now you may be able to catch the trends before the stock takes action, and that is the beauty of chart analysis. Now let's take a look at a trade that Mark made some profits based on his chart analysis.
So Berkshire, when I finally put this on the list, it had been, it's above the 200, it's above the 50, it's above the Bollinger Band. It's just tapping on the 9 all the way up. I was watching, and I'm coming down here. I'm saying, okay, the MACD's going up, the Scholastic's going up. We got a good RSI. So that's when I put it on the list right here on this white line. And you see it came up for the next 2 days and then again kind of came down and bounced off a level. You can't see the resistance line on this particular chart, but it was following the Bollinger Band up. And then this was the day, this was Wednesday. So this was a Fed meeting day. And I said in the morning blog, we're up. I'm going to set a stop limit, around the 9-day. Just in case we get a decline. This is our cost basis, so we're going to make at least this much money if it goes down and hits, which it did. And you can see what's happened in the next 2 days. So we made this much $400 some on 100 shares. In the next 2 days, it's down. You can see right now it's bouncing its head off the 20 now. So it's gone down between the 9 and the 20, and now it's hitting the 20 as resistance, and we'd have support down here. So we'll see if it goes down and bounces or can get across. But again, when I looked here, I'm looking, okay, we're seeing a little roll. I made a note that the histogram on the MACD is starting to show weakness. We already had a crossover stochastic, and then the next day we lost momentum. It says, here's our momentum. So we got out at the right time because we tightened up our stops. Some people say, well, look, I could have got out here or here, but I was letting it ride because I knew I had to stop. What if this kept going up? But again, you have a stop in. If it goes down, you're safe. And look, we would have stayed in this, we'd be underwater now. We'd be down 361.20. I think we bought at 363.15.
So with that, if you are interested in the swing trade updates, daily ticker suggestions, educational content, and live Q&A with Mark on a weekly basis, make sure you join our Platinum member in the description below so that we can make it through this tough market together. Thank you very much for watching and looking forward to see you on our next video.